and that you join us today with this exciting topic. So today is the 22nd of October. This presentation, we're going to talk about commercial real estate acquisition lending options for small business. And our presenting partner is US Bank. We thank the Greater Milwaukee Foundation, which has supported our financial education series throughout these last 2 months. So we have been conducting series every Tuesday and Thursday. Your moderator for today is Nelson Solar. I'm the president of the Latino Chamber of Commerce of Southeastern Wisconsin. I'm also one of the founders of the Latino Entrepreneur Network and a business owner who owns a business and tax consultation firm. So let me talk a little bit about the two organizations that are hosting the Más Fuertes program. So the first one is the Latino Chamber of Commerce of Southeastern Wisconsin. The mission of the organization is to foster the economic development of Wisconsin by advocating, strengthening, and promoting the growth and development of Latino and other minority and emerging enterprises, with the goals of providing increased access to capital, business opportunities, job creation, and capacity building programs. The other organization is the Latino Entrepreneurial Network. And the mission of the Latino Entrepreneurial Network is to promote entrepreneurial awareness and education through bilingual coaching, professional development, and networking. So we also remind you, we've been holding these sessions every Tuesday in Espanol and every Thursday in English. And this is our last session in the financial planning series. We will start next month with series on sales and marketing for businesses after the pandemic, or actually during the pandemic. If you need more information about our Más Fuertes program, or you need information about the chamber, remember, we are in the business of micro lending. So we do have some microloans still available for businesses that have not gotten any assistance for payroll or rent. You can call us for more information. We also doing business coaching and technical assistance via social media, Zoom, and other mediums. We also can take with appointments some individuals in our office. You need to call us first at 414-888-2270, 414-888-2270. So that's all I have from my side. I'm going to introduce our guest of honor today. Her name is Leticia Schwengel. She is from US Bank, and I'm going to ask her to unmute herself. Welcome, Leticia. You're still on mute. Welcome, Leticia. So I'm going to let you introduce yourself, and you let me know when the presentation, I should proceed with the presentation.
Well, thank you, Nelson, very much again for the opportunity to be able to host this discussion on what I think is a very important topic. I am, a local Milwaukee girl, grew up on the south side of Milwaukee, and have been now in commercial real estate for about 8 years. Focus at US Bank as a business banking relationship manager, where I work with a large portfolio of clients, small to large clients, in helping them with any business need, but predominantly in acquisitions of both owner-occupied and investment real estate. So let's get started. All right. So again, just kind of showcasing my name and my title at US Bank. Looking forward to discussing the different commercial real estate options that we have to offer at US Bank. All right. Well, US Bank is definitely a commercial real estate lender that you can trust. We are one of the 5th largest banks in the country. We are a very large presence. We have a very large presence here in Wisconsin. Our primary office is located in downtown Milwaukee, but we do serve our clients throughout the state of Wisconsin. All right, so today's topic is really focusing around owner-occupied real estate. So you as an owner, what are the advantages that you have when you acquire your own property? There's a lot of advantages to owning your own building, and it allows you to build wealth. It allows you to be able to build equity. It also allows you the ability to potentially have some tax write-offs, right? So you're able to write off some expenses. In addition to that, oftentimes we see that clients that are currently in a lease option are paying for what we call triple net leases, right? So you're responsible for taxes, insurance, maintenance of the building, utilities, etc. So you're really paying somebody else's mortgage. And what we want is to ensure that you are taking advantage of all of the opportunities that are out there for you to be able to own your own building and be able to pay down that building, build equity, and again, as mentioned earlier, continue to grow your business. At US Bank, we also focus on investment real estate. Owner occupied and investment real estate are really the two key areas that we focus on. With investment real estate, it gives you the opportunity to be able to diversify your portfolio. We work with a large range of different types of properties, whether it's a single family to multifamily, office, retail, industrial, etc. Anything that could be considered investment real estate. Keep in mind that you, as a owner-occupied individual, could potentially fall under the investment side, depending on how much percentage of the building you're actually taking over. But having investment real estate also gives you some additional tax advantages, where there is the opportunity to write off taxes, interest, amortization, depreciation. I mean, there's a lot of different factors that play a role in any type of asset that is commercial real estate. We have very competitive terms and very attractive interest rates on both owner occupied and commercial real estate. But let's get back to owner occupied real estate and talk a little bit more about that. With owner occupied real estate, we have two different options. We have traditional conventional financing, which typically requires a 20% cash injection, depending on the type of business that you're operating. More often than not, we do see that small businesses do opt for the SBA program. The SBA program stands for the Small Business Administration. And that type of program allows business owners to be able to maybe maximize the current liquidity or cash that they have, right? Because it only requires a 10% cash injection on the down payment of the acquisition. So the SBA loan does give you the opportunity to be able to grow and develop your business. It allows you the opportunity to, again, retain some of your liquidity. It also gives you the ability to maybe have a little bit of a lower payment on a monthly basis, which can certainly help with your cash flow. US Bank is a preferred SBA lender, which means that we do our underwriting in-house, which is great. You'll be working with us directly throughout the process. And the SBA program can be used for purchase of a building, for construction of a building, expansion of a building, equipment, working capital, inventory, really pretty much everything that your business needs to be able to operate. And there are two different programs available within the SBA program. There's 3 R's to keep in mind when we talk about the SBA: recapitalize, restructure, and retain. So what does each of these terms mean? Recapitalize basically means that it gives you the ability to be able to have working capital. It gives you two different options, whether it's you're looking to buy a piece of equipment and you're looking for a term loan, or you're looking for a line of credit to be able to purchase your inventory or your goods, sell your goods, and then, of course, be able to repay that line of credit down and have that line of credit become available to you on a routine basis to be able to continue to kind of go through that cycle, right? You're buying, you're paying it down, you're reusing your line of credit. And oftentimes, lines of credits come with a pretty attractive interest rate depending on the type of collateral that we're using. For those of you that currently have an SBA loan or an owner occupied building, we do have the ability to also refinance those types of property. It's not just for new acquisitions. If you're looking to potentially re-amortize your loan to be able to reduce your payments, or maybe take advantage of the equity of the building, or just be able to, again, extend the repayment terms of your loan, we can certainly assist with that as well. We also have the ability to retain. So what does that mean? I think I've mentioned it a couple of times already, in allowing you the opportunity to be able to retain some of that additional liquidity. Cash is key. You hear that often, and it's nice to have that available for any future emergency needs. We've seen a lot of that over the last, 6-7 months now with the current health crisis with COVID-19. Next one. All right. So with SBA, I mentioned earlier that there are two different types of loans. We have the SBA 7A real estate loan, which is, again, only requiring a 10% down payment. So what I call cash injection into the purchase of the acquisition. It is permitted for both construction, purchase, or refinance of your buildings, and it can be fully amortized up to 25 years. It does also come with very competitive pricing and fixed interest rates, which oftentimes when you're dealing with investment real estate, we don't necessarily have the ability to offer you long-term fixed rates. And oftentimes those rates or terms are based on the leases that are occupying your investment property. But with the SBA 7A program, there are no origination fees. So that's certainly a help for a lot of clients. And we can go up to a maximum of 5 million on this type of product. Next, please. All right, so the second type of SBA loan that we have available is the 504 real estate loan. This can also, again, be used for purchase, construction, refinance on any type of owner-occupied real estate. It also only requires 10% down on the purchase of the acquisition. In addition to that, it is also fully amortized over 25 years. And it also comes with very competitive pricing and terms. I keep using the word amortized, so I guess, should clarify if people know what that means. It's amortization. It just means that you're making your payments over a certain period of time. So for example, if you take out a loan and your term is 10 years, amortized over 25 years, it just means that your interest rate most likely will be fixed for the 10-year term. And then upon that term expiring, you then renew your loan. What that then means is that you now have paid in 10 years. So you have 15 years left on your note. So you then will then refinance for, 5 over 15, 10 over 15, or even 15 over 15 sometimes. But it basically assumes that you're making your payment over a period of 25 years. All right, so let's take a look at the differences between the 504 and the 7A. In reality, they are very similar. The Small Business Administration has been very active in assisting small businesses, especially during the current pandemic, to ensure that these businesses are able to sustain, survive, and be able to continue to grow, or at least retain certain levels that will allow that business to survive. So here we have, again, a comparison of the two. So advance rates, again, up to 90% of the acquisition cost of the building. There are different prepayment types depending on the type of term that you choose and the type of product that you decide to move forward with. It is really important for you to have a very educated and detailed conversation with your business banker or commercial lender to be able to understand what makes the best sense for you. Is it something that you want to lock in for a long term? Do you have expectations that your business may potentially grow in the next 5-10 years, where maybe the current space available in your building might not be enough in 5 or 10 years? So it's definitely important to have that kind of discussion, because some of those prepayment penalties can be pretty significant and impactful to some small businesses. When it comes to SBA fees, you are able to roll them into the 504 loan. So that definitely allows you to retain, again, some of your additional capital and liquidity that you currently have. As you're taking on a new obligation, a new debt, it's important for you to sustain liquidity. And banks also like to see that, right? We don't want you to utilize all of your capital for the acquisition of a building and be left dry without any cash to be able to, again, sustain any type of potential emergency or drop in sales. The 7A may potentially allow you to, again, add those fees as well. Ability to add working capital. So if you're looking to buy a building and you know that you need to add certain things to the building, or you know that you need to buy equipment or buy inventory, and you need a line of credit, some may allow you to do that, some may not. As you can see here, the 504 program does not. The 7A does. So definitely, again, have a very educated conversation with your commercial banker to ensure that you know which one is the right service for you. Both are or can be fixed up to a 25-year term. Again, I just caution you, we do have a very attractive low interest rate environment today, but many things can happen. You decide to sell your building, you decide to step away from the business. God forbid something happens to you or someone that's instrumental to the business. So definitely, again, something to consider and really think about. The maximum amortization on both is up to 25 years as well. So we talked a little bit about the SBA programs. We spoke briefly earlier about conventional financing. Well, conventional financing is also something that is available to owner occupied owners. Um, this type of product does require a 20% down payment or cash injection when you make that acquisition. So again, it does tap into your liquidity a little bit more, but it does oftentimes come with maybe lesser fees. We at US Bank do not have an application fee or origination fee for our conventional loans. It also gives you the ability to oftentimes obtain a little bit of more of attractive interest rate. So, how do you know which one you qualify for? Again, something that you definitely have to sit down and talk to your commercial banker to see what makes the most sense for you and your company. With the SBA, there is a requirement that you must have a certain percentage of occupancy in the building for it to be classified as owner occupied. 51% typically for an existing stabilized standing building, and then 60% for new construction. When it comes to conventional financing, we only require that you occupy 40% of the building. The other 60% could certainly be used as, rental income, whether you have a multi-unit building floor that maybe you don't utilize or need the entire space. You certainly have the ability to find tenants that will then, really bring additional income to help you sustain that mortgage as well. When it comes to the SBA, 90% loan to value, so 10% down, conventional, 20% down, 80% loan to value of purchase price. When it comes to permanent financing, term and amortization, there's a couple of different options for them. 25-year amortization is typically, as we have mentioned, for the SBA. We can have fixed terms up to 25 years. When we talk about investment real estate or conventional lending, typically, depending on the type of business that you own and the type of structure and building that it is, we can go, 5, 10, 15 years. If it's a 100% investment property where you are not occupying any of the space, our terms typically are 5 years amortized over 25 years. But again, both have a multitude of different options when it comes to fixed terms and fixed rates. And it just really comes down to what makes the most sense for you and your business. Okay. So that was kind of a snapshot of commercial real estate, something that I love doing. So if you definitely have a question or a concern, or if you're looking to potentially refinance, I am happy to take a look at the financials, analyze your business, and see whether or not it makes sense for us to be able to move forward with a refinance. Or oftentimes we just analyze financials for clients or prospects and just give them some feedback of what we think it's making them look strong versus maybe what are some weaknesses that we can address and maybe look to do something in the future. So my name, number is available for any question or advice.
Well, thank you, Leticia, for sharing this valuable information. Again, those of you who are tuning and listening, I didn't see any questions on the feed. However, Leticia is available to answer your questions. This presentation will be on our Facebook page and YouTube channel for your reference in the future. Remember, you were looking for the presentation in Spanish. It's already been published. It was published on Tuesday. So we thank Leticia, we thank US Bank, the Greater Milwaukee Foundation for supporting this Más Fuerte recovery program. And this is the educational component. If you or anybody is still struggling with issues regarding the pandemic, especially those businesses that depends of client traffic, remember that the chamber has a microloan available for those individuals. Is very convenient. It's only 3.75 and half of the loan is forgivable if you use it for payroll or rent. So it's a very good product. We have been able to help 25 businesses. We already deployed $75,000. And we have been able to connect other businesses with around 335 businesses have been connected either with PPP, EIDL, or the government grants. So we're very active in assisting small businesses. So we hope that you connect with us. We thank again, Leticia. This is valuable information that will be deployed and help a lot of businesses. And we encourage all of you to connect with her. Thank you and enjoy the rest of your afternoon.
Thank you.